This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices slipped on Tuesday as recession concerns and worsening COVID-19 outbreaks in China sparked fears of lower fuel demand, outweighing supply worries. Brent crude fell 23 cents, or 0.2%, to $97.69 a barrel by 0726 GMT, while U.S. West Texas Intermediate, WTI, crude fell 32 cents, or 0.4%, to $91.47 a barrel. Both benchmarks hit their highest since August on Monday amid reports that leaders in China, the world's top crude importer, were weighing an exit from the country's strict COVID-19 restrictions.
India stands to gain from a price cap on Russian oil, and the United States hopes that it will take advantage of it, U.S. Treasury Secretary Janet Yellen said ahead of a visit to India this week, media reported on Tuesday. The United States and its allies in the group of 7 rich nations aim to prevent Russia from profiting from oil after its invasion of Ukraine on February 24, while ensuring that most of its oil continues to flow to global markets. The G7 nations plan to cap prices of seaborne oil shipments from December 5, with a second cap on oil products from February 5.
Moving on to the top news in the energy sector.
India's fuel consumption, a proxy for oil demand, rose to its highest in 4 months in the festival month of October, data from the Petroleum Planning and Analysis Cell, PPAC, of the Oil Ministry showed on Monday. Consumption in October was 6.7% higher than the previous month, while also up 3.4% year-on-year at 18.37 million tons, the data showed. The data indicates that the negative impact of the monsoon season is now coming to an end, Refinitiv analyst Ahsan ul-Haq said.
Developing countries need to work with investors, rich countries and development banks to secure $1 trillion a year in external financing for climate action by the end of the decade and to match that with their own funds, a report said on Tuesday. The report, released ahead of talks on climate change finance at the COP27 summit in Egypt, said the funding was required to cut emissions, boost resilience, deal with damage from climate change and restore nature and land. The world needs a breakthrough and a new roadmap on climate finance that can mobilize the $1 trillion in external finance that will be needed by 2030 for emerging markets and developing countries other than China, said the report.
Next, we have the top news in metal markets.
Dalian iron ore climbed to its highest in 2 weeks on Tuesday, supported by persistent hopes of China easing its COVID-19 rules and technical buying, despite worries about a surge in new coronavirus cases in some Chinese cities and weak steel demand. The most traded January iron ore on China's Dalian Commodity Exchange ended daytime trade 2.6% higher at 680 yuan, $93.80, a ton, after hitting its highest since October 24 at 683 yuan. The steelmaking ingredients Dalian contracts for February and beyond posted bigger gains amid expectations that any major shift from China's strict COVID containment policy could be undertaken in 2023.
Copper prices edged up on Tuesday, supported by low inventories level, but China's determination to maintain a strict zero-COVID policy capped gains. The most traded December copper contract on the Shanghai Futures Exchange, SHFE, was up 0.3% at 65,780 yuan, $9,061.11, a ton, as of 0755 GMT. While 3-month copper on the London Metal Exchange edged up 0.2% at $7.931 a ton. London copper prices jumped 7.3% last week, their best weekly gain since March, while SHFE copper hit its highest since June 20 on Monday, amid hopes that China would ease its strict COVID-19 curbs, which could boost metals demand. We will now look at the top news in the agricultural. The lowest cost in freight offer presented at an Egyptian state purchasing tender on Monday is believed to be for Russian wheat at $369.95 per ton for 40,000 tons, traders said. Romanian wheat was offered lowest on a free onboard basis at $356.45 per ton for 60,000 tons, they added. Egypt's state grains buyer, the General Authority for Supply Commodities, GASC, is seeking an unspecified amount of wheat in an international purchasing tender.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.